Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics, one that is post covering finance and property news. It's another Monday evening, been quite a week, and Edwin is with me. Hey, Edwin, can you believe what's going on?
Oh, Martin, the world is getting scarier by the week. And I mean, it was only centimeters, millimeters from could have been what could have been the dawn of a different world, a different week. If if that bullet hit its mark, it's incredible. I mean, I guess what we're going to be talking a bit later on is what the WeChat chatterers are saying, because they're the ones that are talking a lot about it, and also how it could possibly. We'll speculate how it may possibly affect our market, and which markets could it affect, based on people, the imports that we had from the USA itself. So that's going to be interesting to see what happens moving forward, now that a lot of people are predicting a Trump victory at the end of the year.
Yeah, it is interesting, and I think that people are now thinking that the election result in the US will be quite significantly moved by the events over the weekend. I guess we'll see. There's a lot of time to go before we get to that point. We're just reflecting on the difference between the US way of dealing with the election, which is almost 2 years of activity and spending billions and billions of dollars, and the UK version where they have a 6-week campaign and then the next day they have the election, and a few days later everything is sort of in the new mode. I wonder which is better. I'm not sure, but I have to say that there's a lot of rubbish on social media, a lot of hype, a lot of overreaction. Feels a bit like the property market to me.
Yeah, I was going to say it's the same thing. You can almost parallel that to the hedonic daily index, and predictions that pundits and people that sit in basements and in Eiffel Towers in the eastern suburbs, telling us what the market is doing or not doing, and they never get out from the basements, or they never set foot, go beyond the eastern suburbs to talk about the property. And this is where, I guess, where our viewers and our followers have an edge over a lot of the commentators and the commentary that's out there, because they get on the ground happenings on a week by week basis, and we talk about what's moving the market, why it's moving, what the perceptions are, what people are going to do, what they're telling us that they're going to do in advance, and they do it. And this is the thing: the groups that we talk about, they do it. They go out there and do it, and we follow them. Obviously, we follow them for the reasons of making sure that we're looking after our clients, from whether it be preparing a house for sale, helping them prepare a house for sale, and managing the marketing and that process for them, or to helping them buy a property to make sure they get the right property. So as consultants, but it's interesting, Martin, because as you and I have been saying and been talking for a very long time now, that how people don't think about the greater influence that global events have on our market. It does move our market, because people will react according. We are very emotional. Our market is one of those very emotive, emotional markets. Whether people are buying, whether they're selling, whether they go out and buy, whether they sit back and tuck their head, pull their heads back in the shell, and or whether they go out the bullish and they go all out, because admittedly, because it's a very small market, and it only takes a few hundred properties in a region to have great impact on the greater on the greater markets of the different regions, because it's that small. So it's interesting what this is going to, how it's going to unfold. We're already hearing whispers from the chatterers. We're already hearing stuff from the silent tigers, and we pay attention to that. What's going to be interesting from my point of view, and the stuff that I like to follow is, talking to a lot of the agents that I've got to know over the last 28 years being in the industry, is just talking to them on a one-to-one, on a weekly basis to see. I'm going to be, paying very close attention to what people are going to do in relation to the numbers on market through the winter season. That's obviously going to be very, very important for all concerned, those that are selling, those that are buying, those that want to get into the market, and also from downsizers, upsizers, whatever size you want, you fit into. Global events will affect our market in the regions and the many markets in Sydney, obviously.
Well, it's interesting. You talk about, effects. I don't know whether this is the Trump effect, but interestingly, the ASX 200 went over 8,000 for the first time, which is a remarkable number, given everything else that's going on in the country with regard to the economics. And I find that quite fascinating to think that, the markets, in fact, markets around the world are pretty extended at the moment. Not quite sure why. But the other interesting observation was the ASX interbank cash futures, that's the implied rate, is also come back a little bit, interestingly. So this is what the market is now thinking about future interest rates. So they're still saying they're going to go higher. But now the implied yield in December is merely 4.41%, which has come back quite a long way from where it was. So I wonder whether this is, the Trump effect, or whether it's just the way that markets were. Or it could well be, of course, that this is more to do with the fact that the inflation numbers in the US were a little bit weaker than perhaps people expected. And therefore, they're now expecting a rate cut in the US in September. But it is interesting that if you look at what's happening in Australia, the commentators are saying, no, it's unlikely that we're going to see significant rate cuts anytime soon. And the fact they're starting to talk now about house price raises might be a little bit less strong than previously expected. So Melbourne is likely to remain subdued compared to other markets. And Dr. Oliver talked about multi-speed markets where, Brisbane and Perth and Adelaide might be doing one thing, but Sydney and Melbourne less so. House price growth could slip below 5% nationally this financial year. And Louis Christopher has the immediate outlook for Sydney and Melbourne. Price falls starting this month has been driven by further deterioration in auction clearance rates over the very recent weeks in both these cities. So it is pretty interesting. But I have to tell you, this was juxtaposed in the paper with this one when they were talking about $19 million 1950s waterfront property purchase. So, the media are all over the place on this, as far as I can see. I don't know whether it's coming or going, and whether anybody knows really. But I thought that's quite interesting. So I wonder to what extent these broader international issues will impinge on the local market. And my suspicion is that it could have an impact. But then, of course, the other issue is that the local story is very much also a problem insofar that our rates are quite a lot lower than many other parts of the world. And it's interesting that Christopher Joy, in his recent article, made the point that the RBA is in an invidious position of having to tackle seemingly much higher inflation while maintaining far less restrictive policy, given its globally low 4.35% cash rate. And while the US Federal Reserve is paving the way to rate cuts perhaps in September, just 2 months ahead of the US presidential election, the truth of the matter is that Australia has a much more difficult path. So I think it's worth just taking a breath here and not assuming that what's happening over there in the US will necessarily impact what's happening here in Australia directly, but clearly there could be some influence.
Look, in general terms and in broad brushstroke terms, we could say all sorts of things, right? But our job to assist our clients, both on the sale and on the purchase side of things, is to understand what market they're leaving or wanting to enter into. And this is why the relationship that we have with that we built over the years, over the decades, with the many agencies and agents around the Sydney region. We've got to understand the type of dwelling. We've got to understand how it's positioned, where it's positioned, what it is, and then go and look at it case by case scenario. I mean, in general terms, I am a believer in having for a while that geopolitical events, global events, do have an impact. And look, in terms of I dare say that the narrative that's going to be spoken about. I mean, the Trump phenomenon is just going to absorb like a black hole all aspects of media. But it's what and who people are listening to that's going to determine what they're going to do. And this is why we go back to the beginning of the show. This is why we pay very, very close attention to that, then to who's influencing our market right now. The people that are influencing our markets are investors, and I'm not talking about investors that have come in 2, 3, 4, 5 years ago and bought into data developments, strata complexes, high-rise developments that have got more holes in them than I was going to say something then, but I better refrain. Otherwise, this show is going to be demonetized. It's got more holes than Swiss cheese. Because they were data investments. So the interesting aspect of it, and this is why, when we look at what's happening in America, and let's say let's roll forward to the election. Let's call it a Trump victory. What happened last time that the Republicans got into power? With Trump, for that matter. And what happened was that we got a lot of cashed up Hollywooders came and swamped the Central Coast, and all the way to the Gold Coast, and property went through the roof. Now, and these are people that have got a lot of money, and they influence the markets. And why did they influence the markets? We go back again to the simple fact that we're a very small nation in terms of properties. In comparison, the amount of properties that you find in all of Australia, you could find in one of the major cities in America. You could find in perhaps even one of the major cities in either Sao Paulo or Rio or even Bogota. It's incredible that how we forget how small. Or many forget, many don't realize, but we pay attention to that. I've always paid attention to that, and I've always for many decades paid attention to the shakers and the movers and the influencers. Historically, I could give you a rundown as to the trends in one of my favorite areas that I've always looked at as the canary in the coal mine for many things. Historically, for property rises and property falls, was the Blacktown LGA, because it's diverse demographics, population, religious people of religious background, the affluent in your Kellyville Ridges, extending, and then further out, extending all the way, close to your Mount Druitt's, and because it's a very big LGA. So I could tell you historically, what demographics, what groups of people influenced that market, and how it went up and what came down, how it went up and came down again, because of the population. Now, right now, what's happening now is we've got a polarization of many diverse groups in your Campbelltown regions, in your Bankstown regions. Your Regents Park, Guildfords. You've got your obviously your Upper North Shore, your Chatswood areas, your Northwest regions. You could and historically, but if you go back even before I even got involved with with sales and property management from 28 years ago. Even before then, you had your regions back then as well. You had your five docks and your Haverfields, where, as I say, tongue in cheek, to get into five dock, you either had to be this descendant of Italian family, or have $3 million, or this is a while ago. Now you need five, or be part of the mafia. That's tongue in cheek. But you can see how nowadays the polarization of the different communities it just become more noticeable, and this is what's influencing a lot of the different markets. I mean, I'm flabbergasted how your regions of, like, for example, your Schofields, your Box Hills, how the Indian community, a section or a sect of the Indian community, have gravitated towards those regions. But I wouldn't encourage any of our clients to buy there, or because historically I know what those areas are prone to, your floods, and what the developers did in order to raise the levels, in order to go through, get passed in as a 1 in 50 to 1 in 100, and they only raised the floor level by backfilling with dirt from elsewhere, as little as 10 centimeters, in order to meet certain criteria, and for those developments to happen. So in my opinion, that's ready for a future, whether it be in the short term and the long term, but that's ready for a major flooding to go through, because of the overpopulation and all that's going on there, in the bad civil engineering that's been happening. And once those waterways and the mains get clogged up, well, then you're in a lot of trouble. So this is why I myself, and I've taught my extended group to pay very close attention to what happens globally. So I dare say I would stand on the opposite side of Dr. Shane Oliver and all the other gurus, because I don't sit in an Eiffel Tower. I get out in the field and I talk to people, and I've ate, breathed, drank, and pooped property for the last 28 years, if not more, in doing renovations and developing. So I think that is where and why our followers get better snapshots as to what's really going to happen out there in the Sydney region. I don't follow any other market other than my own backyard, in order to give these snapshots. But if you take the fundamental principles that we've adopted, I do think that there'll be parts of the Melbourne region that will be affected by big money that will come from all the elites that lean to the left of the political spectrum over there, because of all that emotional BS of getting away from a Republican anti-democratic, whatever you want to say, party, but more to the point, it's our Central Coast, Noosa, in all these areas where these people have gravitated to previously. I dare say that it went backwards in the last couple of years, but it may well pick up again because of that money that's coming in. The interesting thing for us, obviously, in the Sydney region is what sort of money, what's the future money that's going to come in to influence our local market here.
Yeah, and I just want to take you back to the end of last year, Edwin, and you did a nice little tweet, right? I remember that tweet very well, about predictions for 2024. And interestingly, number 6 on the list of your predictions was a famous individual is assassinated to influence the election in the US. And that was alongside some areas of Sydney might hit 50% higher price increases. It seems to me that you have your finger on the pulsar.
Hey, listen, I didn't have my finger on that trigger, on that pulse, right? It wasn't me, Martin. I wasn't there. Now, it was just one of those things that, as I shared with one of our followers, that they reached out to me on they DM me on the on my Twitter account, and it was actually it was actually a dream that I had, and that's why I put it in there. I mean, I try to avoid political stuff, but it was so front and center, so front of mind that I just put it in there, and here we are. And it's going to be interesting to see what happens moving forward. Admittedly, in my dream, things played out a little bit differently, but I just put it as is in order not to get not to get kicked out of X as well, or not to get knock on the door by the powers to be and say hello, what is this then?
Yeah, well, but it isn't. Look, the point we want to make, Edwin, is that we can talk about grandfaluting overall top-down strategies, right? But what you're doing is you're feeling the wind, right? You're actually seeing what's going on the ground across the various markets that you know really well, and that gives us a significant advantage in trying to understand and decode what's going on. And, we were calling 6 to 9 months ago that Melbourne was going to go wobbly, right? And boy, has Melbourne gone wobbly. We were also calling the potential significant influx, particularly from India and from Vietnam, as well as from China. And the fact that more money's coming means that in some places we're going to see prices probably rising. So it's really important, as we keep saying, to go granular and not be swept off our feet by sort of high level trends and high level summaries, because the problem with high level summaries and high level trends is that they mask significant differences and they give us perhaps a false sense of understanding. So, for example, the prop track data, which came out a little while ago, basically showed that Melbourne prices had dropped both annually and monthly. Hobart prices had dropped monthly and annually. The ACT had dropped in the last month, but Sydney, Brisbane, Adelaide, Perth were all up. Darwin, annual up, down. Now, these are averages, but averages don't really tell you very much at all because, of course, averages are made up of very significant differences across different locations, different types of properties. And the point here is that this can be a very deceptive tool to try and figure out what's really going on the ground, because we can point to areas of Sydney where prices have gone nowhere, but we can also point to areas of Sydney where prices are significantly stronger than the annual growth of 6%. And that's the point, isn't it, really? That to really understand what's going on, you need to decode and go granular and look local.
Yeah, and this is what I put there on point number 3. It was the Sydney property market in general terms will rise a further 5 to 10% across many LGAs in suburbs. And then point number 4 was some areas of Sydney may hit 15% higher price increases, which we've seen. And we've seen it. We've seen it unfold. Why? Because of the obvious. The money that's coming in, the open money border policies that the government has, let's turn a blind eye to dirty money, shady money that's coming in from overseas, and the way that it's been brought over. I mean, we've been sharing about this over the last couple of weeks, 2 or 3 weeks, in relation to Premier Lee's invitation for Australian passport holders to visit China. The 15-day visit, with no visa, and we've spoken about how that is being used and how it's being utilised. And the chatter amongst the chatterers is that happy days, because that is a way that that money could flow out of China that would otherwise be very, very people will find it very hard to take money out of China. Now they don't care if they lose a large percentage in the changeover of the currency. They don't really care because better here than there is their philosophy. There you could potentially lose a whole lot. I mean, there's been so many banks that have been going bust over there. And people might think, but hold on a minute, you can only bring in, 10,000, the equivalent of $10,000, per person. But hey, you can literally make, weekend trips on a weekly basis, to go there, and you could, if there's 3, 4 of you, as a family, and each bring in a wad of cash. It's not like they check every single cent that you got on you, and that's that's not the only way that money is transported. I mean, it gets converted into designer label bags. They buy over there, and they bring it over here. And again, it doesn't matter to them. They don't worry if they lose a bit in the transaction. Whether it be, a Rolex watch, could be worth, a couple of $100,000. And if you got 150 here, which there's a fair bit of money here amongst the WeChat chatterers, they'll buy it for 150. It's $150,000 here, better here than over in China, right? So, and this is where you've got then you've got those schemes, as we've said, Martin, and we've spoken about, is your your trusts, basically, where you don't know who owns the trust. I call them your syndicates, but the legal term for it would be your bare trusts, where people are being appointed here. Obviously, they've got family over there, and that's the security of the people that are pushing the money over here. For these people here that are the directors of the companies that are controlling this bear trust in order to buy established homes. Oh, hello, lo and behold, as I've put out on many posts and we've discussed, there are 6 ways to Sunday for people to buy, foreigners to buy properties here in Australia as investment properties, by circumventing the FIRB regulations, and they can buy established homes, which is really what the FIRB was meant to stop, but they're not stopping it because they're not putting again, I say the closing, they're turning a blind eye, because the governments, the federal, state, and local governments they've got to have their fix. They've got to have the stamp duty fix. They've got to have the land rate fix. They've got to have it's all 3 levels of government are basically addicts to the taxes and the duties that are payable by foreigners, which pay more. So why would you want to stop? Why would you want to stop the supply of your fix when it's really what they need and they crave, like heroin addicts. It's just the thing that's going to happen, and this is why politics. This is why the population. What we've talked about, the immigration policies, have a strong influence on our markets. Again, we go back to, we're a very small market, and the appetite for people and the desire for people to live in this great nation of ours, which unfortunately is becoming a third world country to the local Aussies. It's 2 different worlds that we're literally living in, and it's shameful. But that's what we talk about, and that's how we break it apart. And as you say, we say over and over again, it's you could be across the road and you could be $150,000 apart in terms of price. And this is what we're all about, and what we try to put out and teach, and for people to be empowered to be out there and take advantage of all that we share.
Yeah, and you make a very interesting point about the different levels of government. But of course, there's also different levels of planning. And I was quite amused by this particular story, which came out this week, where you've got this project for 550 new homes. This is in Penrith CBD. Developers Thornton, North Penrith want to turn a vacant parcel of land at 184 Lord Sheffield Circuit into an expanded high-rise residential and retail precinct, right? Um, so the local planners who have a master plan said, well, okay, but there was a refusal, and the refusal came from this entity that I've never heard of, the Western Sydney Planning Panel. That's despite Penrith Council planners and independent review calling for residential development to be given the tick of approval. And this is another of those remarkable stories where you sort of say, well, hang on a moment. You've got all these things pulling different directions, right? You've got thou shalt build and build up from, I guess, Albo and from the state government. You've got the local planners doing one thing, but it's all over the place. And I'm not suggesting that this is a good development or a bad development, but I do think it's really interesting that all these different layers upon layers within the planning and within the different governments are all pulling in different directions, which is, again, another reason why property is such a mess. And you know, whether this is the right thing to do for this particular site or not, the fact is, in hundreds of different sites across Sydney and more broadly across the country, you've got huge amounts of contention between people who want to build, developers who want to build up, people who live in the area and want to resist it, politicians who are, on one hand, needing to generate more money, as you say, through all the various fees. And so one way is to approve. And then you've got other planning entities that are saying, no, we can't do that. So we are in a real mess here with people chasing their tails and going around ever-decreasing circles. And in the meantime, this just puts yet more pressure on property.
Yeah, and fundamentally, we don't put a stop on the immigration policy. We don't put a stop to that in order to sort all this shit out, and they won't sort it out because these groups are very strong. And look, on the one hand, you could say, well, why build so high? In order to build that high, you would need to obviously accommodate for 2-3 level basements, but you're building closer than the Pian River. I mean, you're building in a floodplain. Have all those kind of measures being assessed? Do they have the right geotech reports? I mean, I don't know who that group are, but I dare say there's somebody in there that's that probably understands and is also concerned about it. But definitely, you and I said when Chris Mintz wanted to take it to the LGAs and the council, we said, good luck. And there's many, and this is just the beginning of the greater opposition that's out there to build. So, is it a bad thing to oppose these high-rise monstrosities and what will become, billion-dollar, $500 million ghettos? You only have to go around and look at your high-rise developments around. Or even your mid-tier developments there around the area, and you have to look at how badly they're managed by the strata companies, what state they're in, and they're only 5 or 10 or 15 years old, and they look like they've been there for the last bloody 30 years, and nobody's taking care of them, nobody's given them a lick of paint, and this is where people forget about all this fanciful stuff that Bob Carr brought in, the SEP 65 to beautify Sydney and to make it all pretty and nice, and decided to go full render on walls and not having much thought as to how do you maintain that render if you're not going to be upkeeping with the cleaning up and rejuvenating the raincoat which paint provides to the render, so it won't absorb the moisture and then it won't crack and then it won't start falling. I mean, this is the sort of stuff that as I say to a lot of people, many things look great on paper. Many developments look great on glossy brochures. Marketing strategies look great on domain or on realestate.com or on personalized websites for that development. It looks great. It's not until it's built and you see the shortcomings or you see how easily it wears and it tears. Within the first couple of years, 2-3 years, that you realize that unfortunately you bought into a lemon. So these are the questions, Martin, and this is why I've been advocating and being a advocate of small to mid-tier developments, maximums that where we could build in the Sydney, in the East Coast. I would say I would extend it to the East Coast of Australia. In some parts, you wouldn't even build anything higher than 3 levels with 1 basement, because of the topography, the nature of the landscape, and what happens once you start digging. And I mean, this is it. I mean, look, we're gonna bring in an interesting show in the next week or two, because I've been doing a bit of digging around as to. I got wind of some interesting stuff with regards to potential catastrophe that may unfold in Newcastle, and it's an early tip and an early warning to many that live or looking at moving into Newcastle or investing into Newcastle. There's some interesting insights which we'll bring to the show. In a couple of weeks' time, I hope to have all the information together, and this is what we come across. Why Newcastle? But it's only what it was only in the 90s, from 97, I think it was 97, 98, where we had the earthquake there, and it almost flattened Newcastle. You can imagine another earthquake of that magnitude to hit Newcastle now, with all the high-rise development and the basements that have been built there. I mean, Bob the Builder was giving us some insight years ago as to how badly a lot of these developments were built, and we saw how some of the piles didn't, the steel only went 2/3 of the way, and I mean, this is it. So can you just imagine? What could happen if we got another shake like we did back then? I can't remember the year exactly, but I can tell you what I was doing. I was tinkering around with. I used to have a Fair Lady convertible, and I was tinkering around with a convertible in the garage at home. I lived in the St George area in Carlton, and I actually thought. My missus at that time, I actually thought she was driving the other car. I actually thought she backed into the garage. It shook the garage that much. I raced out, concerned to see what happened to her, and I'm thinking she was in the house. And did you feel that? And she thought I blew the garage up. Yeah, but these are the thing, Martin, that if governments from 2-3 decades ago we continued that consistency of building the small to medium, we wouldn't be in the situation that we are now. Property prices would be a lot less costly, more attractive for your first-time buyers. There'd be a lot more of them, and we would have gotten rid of a lot of these asbestos-riddled old homes that should have been demolished even in affluent areas, even in the West, and brought about duplexes, triplexes, or 4 villas and the like, in order to accommodate the retirees and the empty nesters to move into, so that the bigger homes can make way for the young growing families. But we don't, because we don't think ahead. Governments don't think that far ahead. They only think what they can take from us in the 3 to 4 years that they stay in power, and then they piss off.
And it's interesting that you mentioned the asbestos issue again. I was actually surprised. I had 3 conversations this past week with people who were looking at ex-investment properties that are actually back on the market now for the first time. And it's interesting. In fact, there was a series of articles this week, all based off something called Suburb Trends, which basically said that with the mortgage spikes, more landlords are actually exiting. So they're saying in New South Wales, over 40,000 New South Wales rental homes turned into private housing over last year. Or this one from Queensland, the great landlord exodus creates pain for renters. And again, they're saying that thousands of Queensland rental homes have turned into private housing over the past year. Or this one in South Australia, again, with rental homes where the postcode data reveals huge fire sales for investment properties in South Australia. Now, you can argue, I suppose, at one level that if a renting property switches to become an owner-occupied property, then that's one less renter and one more owner-occupier. So that might be good. But on the other hand, what I've discovered from my conversation is that a lot of these properties that are coming on are relatively under-maintained properties, because investors over the years have not really kept up with the rules and regulations and everything else. And of course, we know that in some states like Victoria, there are lots of regulations now that they have to follow. And I had 3 separate conversations with people who were looking at ex-investment properties. And in each case, they were wise enough to get a proper survey. And in each case, asbestos was found in those properties, along with poor wiring and other structural issues as well. So in each case, they walked away because effectively that was a scary thing. So what we're seeing, I think, Edwin, is a flood on the market of really poor quality property, ex-investment property. And I worry that some of those people who've bought in to these properties, perhaps first-time buyers desperately get in, are actually not doing the due diligence they should and are effectively buying problems down the track. Because asbestos and these other issues, they don't go away. They just get worse over time. So for me, this is a really, really important trend. So firstly, the switch of investment properties out, although interestingly, more people are still borrowing for investment purposes, but also the fact that you've got a lot of poor quality property coming on the market as a result of this.
Yeah, and this is what we've been saying, and this is what we shared. I think it was a couple of weeks ago. I said that brought about another prediction that potentially we could see a lot of listings on the market in the Brisbane region. And why? Because sooner than later, as Queensland continues to adopt the minimum standard policies that Melbourne have, because they run so close to each other, the peas in the pod, it won't, over the next 3 to 6 months, we're going to see a lot of the stuff that got bought out in Melbourne, and and then you've got people running up for the cost that would have to incur in order to bring them to the minimum standard. Now, so we could end up with a lot more properties on the market in the Brisbane region. A lot of the investment properties, more to the point, your strata complexes, which in Brisbane, Logan City, Logan Central, Redcliffe, and a couple of other suburbs that elude my mind at the moment, were townhouse developments that were built in the early 80s, which the Japanese bought. A lot of Japanese investors bought, but the thing is, the materials that they use to build these are weathered. The weather there in Queensland is a bit more harsh towards the dwellings, and unless you're really building out of brick, with a brick skin, all the weatherboard stuff is really weathered. And it's due for a lot of these developments are due for a big makeover. And I'm not talking about a lick of paint and let's change the bench top and paint the kitchen cupboard doors and put new flooring on. I'm talking about bathroom renovations, full kitchen renovations. I'm talking about potential insect issues, termite issues, and so forth, because of the nature of the materials that they used back then. in those areas. So these are the properties that are going to be put on the market in great proportion once your minimum standard regulations really hit. Or they're in place, they're meant to be applied, but the government gives them a certain amount of leeway, a certain amount of time to basically get your house in order, get your investment properties in order. But sooner than later, they will start clamping down on that. Now, the other thing, obviously, with that is you've reached the point in a lot of these regions in your Melbourne region and also in your Queensland regions, because let's not forget that they, as I keep on saying, we keep on talking about, is it's harder to invest in these areas where you can't control the budget accommodation scenarios like you can control it here in Sydney, in your Sydney region. So people that generally invested in Melbourne and bought investment properties in Queensland, guess what? Sydney-siders. Hey, hello. And the Chinese are saying, the WeChat chatters are saying, hey, let's not go there because it's harder to do that, because the demographics, although they are being polarized to a certain extent, but the polarization of the certain demographics there are not necessarily the type of demographics that the WeChat chatterers find it easy to get along with and to control the room letting scenarios like you can control here amongst the Asian communities, because there are there are more humble, somewhat humble cultured background, and that fundamentally they don't create any problems, whereas other cultures will create a lot of problems, and they'll try whatever it takes to get away and not paying rent. So they find it very, very difficult to do that, especially when you're interstate. So they're the two scenarios that we're going to see unfold. But you can't, and therefore your rents are capped, which is what you're discussing earlier on. Your rents are capped, and you're not getting the monies that are required in order to maintain them. And because a lot of the investors have let them go for so long, because they're also interstate, and the property managers are absolutely hopeless. I haven't come across good property managers in your Melbourne regions that I've had, or I haven't had great reports of property managers in your Melbourne region. I haven't had great reports of property managers in your Brisbane regions. I mean, we're on a 50-50 here in Sydney, but I think there are a lot lackadaisical there in there. And when the landlords are interstate, there's less care that's been taken. So there's not really a good general feed, or there's no real good conduit of communication between the property manager, the landlord, and the need of maintaining the property. So things go to shit, and here we are. Where, and of course, with all that, yes, you could say you've got a renter, then a property gets put on the market, and that renter becomes a homeowner, and so forth. But if we weren't growing the population at the speed of knots that we're growing the population, Martin. So this is fundamentally, yes, it works when you've got your natural population growth. You could say it works, and it works quite well, and you could lean on those statistics or those numbers. But when you've got when you're growing the population by greater multiples and a greater speed, that means nothing. And this is why we've particularly when you've got your Sydney region markets. So in your Sydney region markets, obviously, you've also got an exodus of landlords in many areas, like I showed you in that chart that was posted by Parapower. Your Camperdown, Annandale, Manly, Artarmon, Newtown, Enmore. You see them there, and the sales, according to their research, of the being investors, but when you start analysing those figures, you also find out that the majority, and I mean the majority of that, are apartments that are being sold. as opposed to houses. So yeah, the dynamics are interesting, and they're different. And as you so rightly pointed out, it's about looking at a property investment journey with greater scrutiny and with a lot more due diligence, or selling your property, choosing the right agent, the right strategy, looking at with a lot more due diligence and having your finger on the pulse there, or simply buying a property for as an owner occupier, as a principal place of residence, where you don't want to buy one of these lemons because it's very costly. And as I said in the predictions, going back to the predictions, that the construction industry was going to suffer a lot more this year, and it has, and it will continue to suffer because we're short of trades. When you've got tradespeople, Martin, that you got your electricians that as apprentices are earning $27 an hour, and your fourth year apprentices are a little bit above that. There's no real incentive for them to finish their apprenticeship when you've got their colleagues working in a warehouse earning $35 an hour and being clocking on at 8 o'clock and clocking off at 3 o'clock and having all sorts of breaks. And the work may be mundane, but this is what so there's no real support to keep these young people, the trades on board, and therefore there's a deficit of skilled, locally trained, skilled trades that would undertake work. And what happens? Prices go up, and building companies collapse because they can't fulfill the orders, or they underquoted on whatever contract they were on, and they come unstuck, and there's less being built.
Yeah, well, you mentioned building collapses, and of course, this was a really interesting article talking about what's going up in Queensland, where there are more stories of building failures and construction workers disappearing left, right, and centre. And there's a story there, unfortunately, of somebody who paid a deposit, was expecting to move in, but still hasn't moved in, and it looks like I'm going to be renting for life. And the chart shows that the number of construction company failures in Queensland rose 62% worse than a decade ago, right? And, it's all particularly clear for those who understand what's been going on. This is no surprise. We knew this was going to happen. We spoke about it 2 or 3 years ago, and we're now seeing it. So it's very, very difficult if you want to try and get something built. And so as well as this investor drift and the building problem, trying to find somebody to build or to make any renovations. If you want renovations, you have to pay through the nose for that. The other interesting thing that's come out again in this article here is that we're seeing again distressed sales. Now, distressed sales are a little bit, as we've said before, a bit difficult to really detect. Sometimes it's more of a marketing spin than anything else. But according to this article, struggling homeowners are going deeper into debt in the last attempt to avoid selling. But there also have been the highest volume of distressed sales in June, although there was a drop last year. And in New South Wales, this is from Finder. I think it's worth just setting that in context of this, that the OECD said that Australian real wage growth is amongst the worst in the OECD. Australia has some of the worst real wage growth in OECD's 38 member nations, lagging behind the UK, US, and Canada. And, that is just worth reflecting. Real wages remained 4.8% below pre-pandemic levels. So you've got this massive push on the cost side, but not on the income side. And yet, and this is the real killer for me, Edwin, you can get in Mount Druitt for $1.1 million, a little old house, or you can go across to, I don't know, France, or even in New York, or even in, Scotland. You can pay less and get a whole lot more property, which sort of shows you that this is a really, really distorted property market in Australia for all the reasons we've been discussing.
Yeah, but listen, do New York, Scotland, in France, right? Do they have fat pizza? No, they don't. Did they have shows in the neighborhood like the shows that we have? Do you have Mounties in like in the back of Cabramatta, and where you could become a millionaire, or Panthers for that matter? No, you don't. And look, let's face it, man. I really, you're such a pessimist. Just because you moved over to England, right? You moved back to your hood. You're forgetting about the fact that we are building a massive beach water resort, or that ski resort in Penrith. So come on, Martin. Where would you rather be? You could be, you could get, look, you could get mugged in the joint in the morning, and you could be skiing in Penrith in the afternoon. I mean, what that's an adventurous lifestyle, but you can't get that sort of shit in New York. But then, hold on a minute, you can get that
You
sort of shit in New
can.
York.
Yeah.
Maybe not in Scotland, but hey, listen, at least we don't have guns, right? So yeah, look, and that's a problem. Why are we here, Martin? Why are we here? It's because we're not building. We haven't been building. We don't know how to build. We don't know, and the appetite for the many investor groups, whether it be your WeChat chatters, your silent tigers, your new kids on the block, all the Kryptonians that have been sitting on a lot of cash that now that have been transferring over to property. People that want to realize that, hey, if NCAT can now hear matters of budget accommodation, room letting, and you can take those to NCAT, hey, it must be legal. So therefore, that sense of that fear of private letting, in letting each room and creating rooms in the house to let out is somewhat being dismissed now, because there is a place to air your grievances if tenants aren't paying, and what you can negotiate, what you can't. I mean, I'm following this very closely with some of the tribunal members that we know, and we're getting some information. At the moment, it seems like the tribunal members are split. A split between hearing these matters and not hearing the matters, but the simple fact is that that 50% will hear the matters. Just goes to show that that sense, if you know what I mean, like you sort of got half the law is on your side. So let's go out and do it. Let's go out and do it. So why are we here? Because there's just not enough buildings. Let's call them buildings. Let's call them dwellings. Let's call them desired accommodation, as opposed to calling them housing. And you refer to 570 badly built dog boxes, in the area, skyscrapers in bloody Penrith, that are going to turn into ghettos, because the strata managers will be nowhere to be seen after the second year, when the developer sells out and moves on. So this is the stuff, and why? Because again, we're not looking after our homegrown talent. We're not looking after our homegrown our families, young ones. We haven't. We've lost that sense of ownership, of that Aussie lifestyle, that battler, that togetherness, and unfortunately, that those at the helm are more interested in taking selfies with Taylor Swifts and your left wing radical, or right wing radicals, whatever radicals you want to take, with movie stars, whatever, TikTok influencers and the like, rather than looking for clear, definitive policy that is going to help the Aussie families to become that nation that we seem to be losing and losing at great speed on a monthly, yearly basis, and it's all going to the dogs, which is crazy. And this is why, and then rather than supporting the locals, what do we have? Oh, on Monday the 15th, the 15th, the TASIS will resume accepting new applications for two trade occupations: metal machinists, first class, code 323214, and electricians, general electricians. So we're not interested in supporting the homegrown talent. We're going to import the tap because we're in a lot of shit and the construction is going backwards. I was talking to one of my electrician groups today, and they've just had a hike in the in cabling by 7% as of today. It's crazy stuff, and he's just lost two apprentices because, as I said, they've gone. They see their mates. One's a second year, one's a third year. The mates are earning $35 an hour in general warehousing. Basically, and they've got more time on their hands and more money in their pocket. To drink on the weekend, and the apprentices that are on 22 and $25 an hour. Crazy stuff, Martin. Crazy stuff.
Well, let me talk more crazy stuff then, Edwin, because the other thing, we talked about policy failure and all of those things. One of the other questions we've been asking for quite some time is, well, what's the real story with regards to vacant property? And, the census in 2021 said there's 1 million properties across the country, possibly vacant. In other words, they didn't return a census form. But it's interesting that Prosper actually just published a report for Melbourne, and they actually looked, this is very detailed analysis where they look across the postcodes and look at the utilization of water. Because obviously if a property is not being occupied, then the water usage is very, very low. And they've estimated that in 2023, 5.2% or 97,800 properties are vacant in the inner regions of Melbourne. Now, just to be clear, they have excluded the areas where lots of second homes and down on the coast. This is in and around the centre of Melbourne. And I think there's a really important question here. And I got into a little bit of trouble when I put this one out because, of course, those with property said, it should be our right to do what we want with our property. We shouldn't have any intervention from government in any respects. And I sort of half agreed with that. But if you're actually in the situation where you've got vacant property deliberately bought to held vacant, which is what we're seeing, or deliberately held vacant because an investor is then trying to sell the property and don't want to put another tenant in. I mean, there are all sorts of questions here. And if you were to apply this sort of 5% rule across pretty much every major centre, guess what? We'd have close to 1 million properties, which is precisely what the census said in the first place. So again, I think this is another policy failure. And I believe that government should be thinking about whether there are pockets where there is vacant property that should be brought back into use. Because as Prosper said, look, you've got to think about this as an asset. And if the asset isn't being used, then it's actually useless, is what they call it, speculative vacancy. So I think this is a really important report. And I don't expect government to do much about it because they prefer to look the other way. But this is another factor in the overall mess that we've got in property at the moment.
Yeah, interesting how they're now focusing on the water usage. I said almost 18 years ago when started looking at vacant property around New South Wales. I guess because was very much involved with property management. I said, look, and they were looking at that time. They were mainly looking at just the electricity usage, and I said then you got timers that can be put and were being put in the PowerPoints to activate certain things, and you could put in a fridge here and there as well. So you could have all this. Back then, I made the suggestion to a number of these groups that I used to converse with, and I said the trick is to see what the water usage is, because that you can't have a automated. Maybe now you can, Maybe now you can, but you could automate your water, usage, but very difficult and very costly. But yeah, it's shameful, Martin. It's shameful that the governments have allowed this to happen. But yeah, look, you and I talk about it. Our followers talk about it and discuss it with but it just the wise listen to the wise listen. Old mate Don Perrottet didn't, and that's why he got ousted. And Chris is in, and yeah, good luck to Chris. And hopefully, as he's watching our show, he'll listen to some of the tips and things that we share, and that are that some of the shenanigans are going out there in the real world. And hopefully they'll do something about it. But yeah, we're still rooting for good old Chris to take it to the LGAs, but it's going to be interesting to see what happens. But at the end of the day, Martin, all these stories, all these going backwards and forwards. But although HIA said that we're not gonna hit, we'll probably hit 95, 97 completions this year. I dare say that we're going to be hitting closer to we're going to be in the mid 80,000s. In terms of building completions, the way we're going, because there's a lot of rhetoric, there's a lot of, as you say, there's a lot of announceables, there's a lot of toing and froing and litigation here, and this group materialising and opposing this and that. Committees being formed. $450 million being thrown at, I don't know what they want to buy with that. If Chris is listening, I'm still out there where you can. I'm still happy to I've got 650 apartments I could buy right now to make good use of that 450 million. But they've got to form the committees, which will take 30, 40, 50% of that money, and the rest may be used to buy off the plan from their mates. Who knows? I don't know. It's just one of those things, Martin. It's a crazy world.
It is mystery all, absolutely. Well, let's just quickly talk about the numbers, because as you'd expect, in the cooler months of the year, in Sydney, there's 16,304 listed on the 8th of July and 16,321 a week later. So, it's sort of pretty much line ball. Interesting to watch the trends, and it's fascinating now to see whether, in fact, we're going to see the 2024 trends converge with what happened in 2023 or not. There was quite a lot of reporting in the week, in fact, that listings were up, but we don't see much evidence of it here, do we, Edwin?
No, and talking to the officers as well, that we, as I said, that we converse with on a weekly basis, they're struggling to get market appraisals. And if they're struggling to get market appraisal sooner than later, that obviously translates into less listings on market. But again, we go back into the what region, what part of the Sydney region, what areas are sort of flattening out a bit, and what areas are still hot, and what areas are listings are disappearing overnight. Not because of being bought, but because of being, people just want to, buckle down for the winter and perhaps bring them back in spring. You got your traditional reasons, you got your traditional, markets, you've got your properties that there'll be also properties that will be sitting on the market a lot longer than what many expect. And the reasons why they're sitting on the market a lot longer than many expect is because, at the beginning of the year, many that were looking in those areas were looking at, 10, 15, 17% less than what inferior property that are coming on the market. As you say, the dogs that are coming on the market are wanting to fetch without much work being done to it. Or you've got your showroom renovation, lipstick over a pig, and they want a lot more. So they're looking at these things, and they're looking at it and say, hold on a minute, let's just sit it out. So you've got all these different factors that will influence the different markets. But yeah, it's there's not a lot. So they can talk distress, they can talk people in a lot of trouble, but it's not translating to a great deal of listings on market, because when you compare it back to 2022, we're on par with 2022.
Yeah, and let's just quickly look at the Melbourne story because there on the 8th of July in Melbourne, 27,046, jump forward a week, 26,848. So a little bit of a decline there, although we're still seeing many houses available in the Melbourne area, Greater Melbourne area in particular. And as we've said before, Edwin, a lot of this is to do with the ex-investment properties, which are still there and still fighting on the market.
Yeah, and it's going to be interesting to I'm sort of waiting for Melbourne. I think a lot of there's going to be a bigger impact, and we're going to see a lot more listings on market. I feel more into the second quarter of next year because there's a lot of industry, there's a lot of chatter amongst the people that have got small industrial complexes or small manufacturing businesses there that are basically looking to relocate because of the horrendous land taxes that the property investors are paying by way of land tax, and that gets pushed onto the to the tenant in outgoings, but how do you go from $150,000 in annual land tax to 360? How do you refer that or force the tenant to pay you the balance? I mean, it's crazy stuff. So I think we're going to, as we see the greater exodus of small businesses, manufacturers, and wholesalers, as warehousing, jump the border, whether it be to South Australia or more than likely to New South Wales. I think along with that, obviously, it's only a given that you're also going to have a lot more residential property on the market as well.
Spot on. Well, let's just quickly touch on Brisbane because hardly any movement. So on the 8th, it was 3639. And on the 15th, a week later, 3663. So hardly any difference. But the auction story is quite interesting, Edwin. And this little video shows you the crickets story, right? Nobody turned up.
Yeah, a number of people turned up, but nobody registered, and this is in a very 6 weeks ago. It was very hot. There's an interesting story behind this. Obviously, I put that up and I shared that with yourself to put it up because although it's it doesn't make the market, but it's in a affluent area. It's what was a very hot area as early as 6 weeks ago. And to the point with this particular property at the beginning of the campaign, when Dusty called the agent, the Chinese-speaking agent, there were two agents heading the sale, being a very much a chatterer environment. The agent was very confident that they were going to hit the mid twos, and we were surprised at that time. And the agent said that in the first open house inspection they had something like 27 groups, and there was a lot of anywhere between 5 and 7 contracts that had gone out on that weekend, and the offers were already running between the 2.3 and your 2.4. Now the agent read the market wrong. On the one hand, on the other hand, the vendors, being inheritance, they got greedy as well, and wanted more. And within 6 weeks, the guide was interesting because the guide was at 2.1. Although when Dusty spoke to the agent, at the beginning of the campaign, he was hot to clock close to the mid twos, and no one bid. But so a number of things. So that's why I put it out. Has winter set in? The interesting thing, Martin, is that the people that were looking at buying these homes, you could tell that they were local WeChat chatters, overseas. It wasn't overseas money that was looking at buying this, and and that was my observation, just because I was there for the entire Open and just listening to the conversations. The other thing that was interesting, as I said, the agent just read the market, read the whole thing wrong, and it was the wrong strategy, and didn't advise in my opinion, didn't advise the vendors well. Historically, that area, a lot of the homes in that area had septic tanks, and people, obviously, all the WeChat chatterers that were there that came in and out of the place were asking that obviously inspected the home for the first time on the Saturday. They were asking the agent and the agents what these two cylindrical things were in the backyard, and the agent was trying to explain to them that they were old septic tanks, and what it. But see, the thing is, as I said to one of our clients that was with us at the time, I said, what the agent should have done is should have got them removed, smashed them down, backfilled them with blue metal and sand and gravel, and put grass over them, because they're no longer in use, right? Rather than have this monstrosity and then scare the crap out of buyers, thinking, so there's a lot that was lost in translation. So this is where people have got to be very, very careful when you're in a market and you're expecting higher numbers than what Superior Property was getting earlier on in the year, and you expect the market to pay the higher prices for inferior property. Well, you got to be sure of yourself. You got to be sure of reading the market. In my opinion, when they were getting the offers of above the 2.3, they should have taken a run. They should have really, both the agent and the vendor. Perhaps the agent did advise the vendor. I don't know. I'm just going to speculate that the vendors got greedy. Historically, that's what usually happens, so now we've got a property that was guided at 2.1. I haven't checked the listing as of today. What the new guide is? More than likely it'll be a lot higher than that, or probably be around the 2.25 or thereabouts. But yeah, so if you are going to go on the market for sale, what it's telling me, and if you are going to try and push people to buy where some emotion is left, and you're not competing with foreign money, or it's not a desirable property because it hasn't been renovated. This property hadn't been renovated, just been cleaned up and not renovated. It's not a desired home as such, or a desired location, or in an area where you're going to have that emotional influence. You got to be careful. Because you're going to put your big assets in the hands of a dud campaign and a dud agent that is not reading the market properly, because they're also overexcited and got it wrong. So then I reached out to a number of my colleagues in different areas, and not all areas, but I would say a good 30-40%. 4 of the agents said that their markets were also somewhat subdued and quiet. But my obvious reply to that was, my obvious question to that was, in terms of your asking price for the properties in comparison to similar 3 months ago or closer to the beginning of the year, where you're at, and that they all said we're between 5 and 12% higher. So you can't expect the market to continue to be driven as crazy as it is in certain areas, but there are areas that are still hot to trot, and I'm sure we'll get some articles of the like, which you shared one of the $19 million success story earlier on, and we'll get more. But yeah, that's it's an interesting scenario. But look, for me, the question is if you're trying to achieve that, is auction the way to go? Do you take the offers early? Is the best offer the first offer the best offer? The agent's got to be on the ball.
Yeah, very important. And sometimes the auction route is not the best one. Just quickly going into the rental sector briefly. Sydney, 13,065 last week and 13,083 this week, so hardly any movement. In Melbourne, last week, 10,671. This week, 10,773. So relatively small moves there. And I guess that's probably not surprising given where we are this time of year. It'll be interesting to see what happens in the spring when we get the influx of new students coming in and those sorts of things. That may change the story. But as we come to the end of the show, Edwin, tip for the week: do something useful, learn something new.
Yeah, learn something new. I was talking to my daughter over the weekend, and this is a subject that came up, and also of Dusty's being into learning AI. She's really getting into the what you can do with AI, and it's not my cup of tea at the moment. I'm sure I'm going to have to learn how to use it and its functionality and how I'll work it out sooner than later. I'll let Dusty play around with that. But it's interesting what from what Dusty tells me. It's I find it interesting. Whereas Evan's more in line with what I'm doing, and that is learning how to fix things. Because it's getting a hell of a costlier by the day, by the week to get things fixed. I mean, I used to tinker around with cars in my younger days and restoring cars and vintage cars, and but you sort of nowadays you open up the bonnet and you don't know what you're looking at. You don't know where the bloody dipstick is anymore. You don't know whether you should pull this little thing out, or whether what's going to happen. But yeah, so I think it's something that the conversations that I've been having with friends and family, as I said, about learning something new, because there's crazy money being asked to do simple things out there, and when you get charged. When you take your car to get serviced by the dealership, and they charge you $27 on incidentals, and you ask the person on the other side of the counter and say, what are these incidentals? And they say, cleaning rags. What, cleaning rags? I could get you a whole bag of bloody cleaning rags from the Smith family for 20 kilos of cleaning rags for $27. You're going to charge me what, $27 for the use of two rags? It's crazy stuff. So just learn something new, learn something useful. That's going to save you a bit of money in the future.
Yeah, very good advice. I do quite a lot of that with regard to the studio here. So I'm becoming more and more proficient at making my own cables and doing all sorts of things to keep myself keeping the costs of doing what I'm down. Also, I'm using AI quite a lot now with regard to the shows and what have you. So there's always plenty to learn. I think it's also good to learn a new thing as well, keep the brain fresh, and that's pretty good too. Edwin, we've come to the end of the show once again. I think this is a record in terms of length, but some really, really, really important issues we've just touched on tonight. And I'll look forward to doing it all again just next week. And who knows what will have happened over the next 7 days, given what's happened over the last 7. We'll see you then.
Fingers crossed, Martin. Fingers crossed. See you next week.
Take care. Bye-bye.